What's up, guys? Chris Rivera here, aka the Ecom Accountant, aka your favorite balding CPA. So today what we're going to cover is how to deduct that fancy car and that fancy apartment on your tax return. A couple of prerequisites before we get into that. You want to make sure that you have the S Corp tax planning strategy implemented. If you don't have that implemented, then make sure you watch my earlier videos because I go through in excruciating detail how to implement that tax planning strategy. If you don't have it implemented, deducting your car and rent is actually quite simple to do. But as many of you already know, having an S Corp is super tax friendly, but the IRS makes it a lot more difficult to deduct things like your rent and your car on your tax return. So that kind of brings us to my last point here. You want to make sure that you follow all of the steps in this video. If you only implement half of these steps in your tax planning strategy, you'll lose under audits. You want to make sure that you watch this video in its entirety and implement every single step that I go through in you and your tax planning strategy. And as always, be sure to consult with a professional because at the end of the day, that is going to give you the best chances at implementing these tax planning strategies efficiently. Okay, so without further ado, let's hop into the details here. We're gonna cover 5 topics in here, and I can't say this enough. Make sure you stay to the very end because every single part of this video is extremely important. Number 1, we're gonna cover accountable plans and why they're so important. If you have an S Corp tax planning strategy, the only way that you're gonna be able to deduct your car and your rent on your tax return is if you have an accountable plan in place. So we'll go through the details on that. Number 2, we're gonna go through the actual calculation of how much you're going to be able to deduct for the car deduction, for your car that you're using for your business. And we're even gonna go through a whiteboard example so that we can drive that point home even further. Number 3, we're going to go through how to deduct rent on your tax return and what the calculation is specifically for how much you are able to deduct. And that part's gonna be very short because it's so similar to the car deduction that it's the same type of idea. So we'll speed through that. Number 4, we're going to go through a live example of both an accountable plan and an expense report, both of which are, if you follow the links below in the video, I've provided you guys with Google Doc links to live examples of my actual accountable plans that I've implemented in my business so that I can deduct things like my rent and my car. And you guys can feel free to use those for your own businesses and your own tax planning strategies. And then number 5, we're actually going to go through Gusto. And for those of you who have seen my videos before, Gusto is an extremely pivotal part of your S Corp tax planning strategy because they automate your entire payroll process. And payroll is a pivotal part of deducting your car and your rent on your tax return. So we'll actually open up my Gusto account and go through the steps that you should be taking to make sure that you're accurately making the adjustments in your payroll system so that you can deduct your car and rent on your tax return. Okay, enough with the teasers. Let's hop into my computer and start diving through the details. All right, guys, welcome into my computer here. So going back to step 1 here, you must have an accountable plan set up. What is an accountable plan? So let's take a step back here for a second and explain something. S Corps are so tax friendly because you're no longer self-employed. Remember, if you refer back to my S Corp tax planning videos, if you don't have an S Corp, the IRS considers you self-employed. However, if you have an S corporation implemented, you no longer are self-employed. Now you're the employee of a corporation. So you have 2 separate entities now. You have you as a business owner, or your business entity separate from you as an individual, okay? Everything should be bifurcated. You should have a personal bank account, personal credit card, business bank account, business credit card, etc. So the main thing here is that for your rent and your car expenses, those actually fall under the personal bank account, personal credit card. Those are personal expenses that you should be incurring. If you have a car payment, that should hit your personal bank account. If you're paying rent, that should hit your personal bank account. Now, in order to be deductible, you have to have this accountable plan implemented. Basically, what's happening here is the business entity, again, personal bank account, personal credit card, business bank account, business credit card, separate entities. Your business entity is going to be reimbursing you as an individual for business related expenses. Okay, think of it as two separate entities. Think of it as you're working for a corporation and they are like, guess what? You set up an at-home office. We're going to allow you to be reimbursed for certain items. So get this, for the business side, any reimbursements that get sent to you are a deduction for the business. Okay, if they reimburse you for your rent, the business entity can write off on its tax returns those expenses, right? Now, you as an individual receiving the reimbursements do not have to recognize any of that income. In other words, what happens is the business entity gets a deduction for things like your rent and your car, and you as an individual, even though you're receiving cash from your business, do not recognize that as income. Very, very key point to understand here. Now, a couple of other takeaways that you have to consider. Number one, there obviously has to be a business use for the expense. So there are things that we're not going to cover in this video, such as cell phones or your utilities or other things like that. Those also fit into this accountable plan. And we'll go through those very, very quickly at the end of the video, but just keep in mind that this isn't only for your rent or your car. Another key point to understand is for this accountable plan to be legit, you have to have expense reports. And don't you worry, I'm sure you're already stressed out about this. I have a template that you can use that you can put together. I recommend that you put these together on a quarterly or monthly basis. Basically, what you want is if you ever get audited by the IRS, because again, these are pretty aggressive tax positions here. You want to have ammunition that you can provide with the IRS immediately that shows them, guess what? We have these documented records that the business reimbursed me as an employee for my business use of my car, my rent, etc. So we're going to cover that at the end and walk through a live example of what an expense report looks like. And then the last part that I'm going to cover here is there has to be a signed agreement in place. Basically, there has to be a contract between the business and you. Again, you're two separate entities here, right? So again, don't you worry. I have a template that I've included at the bottom of this email that you could just click the link. It's redacted. It's obviously the accountable plan that I've put in place for me and my own business. But basically, you put your own information in there for your business entity, you as an individual, you sign it, and you've got an accountable plan in place. You just have to follow it and put together the expense reports. So that's something we'll also cover in this video. Okay, so moving right along here, we're already on part 2, and this is how we're going to calculate your car deduction. And before we jump into the calculation, let's jump through some key considerations. Number 1, you're going to want to track your mileage. And this might sound like a headache, and to be honest with you, it really is. Look, to be completely honest with you, the vast majority of my clients estimate their business use mileage versus their personal use. And it's very, very pivotal, as you guys are going to see in the next couple minutes here. It's a key part of the calculation. What is the percentage use of your car? If you drove 10,000 miles in a year, what percentage of those 10,000 miles are related to your business? Now, the best way to do this, to track your business use mileage, is to download one of those cheesy apps that are in your iPhone or Android app store that each and every time you get in your car, you pop open that app and you tell the app whether or not you're driving for personal or for business use. Now, here's the funny thing. If you're in the e-com game full-time, meaning you don't have a 9-to-5 job that you have a commute for, you're in a great position because chances are 50 to 70% or sometimes even more of the business or of the total mileage that you have in your car is likely for business because you don't have a commute. And that's actually when an IRS agent comes in and asks you about your mileage and how you determined your business use mileage, the first thing they look for is what is your commute, because your commute is not tax deductible, whether you have a business or not. If you have a commute, that is personal use mileage, which is very, very tricky, but true. With that being said, if you have an at-home business and your office is at home, you don't have a commute. So something to keep in mind there. Another key consideration is that the mileage deduction is really worthless if you're in the e-com game, and really the more expensive that your car is, the less valuable the mileage deduction is. So I don't want you to get confused with the mileage that we were just talking about, where a percentage of your mileage needs to be used for the calculation of what percentage of your car is deductible. There's a separate calculation that the IRS allows where they have 58 cents is deductible for every business use mile that you drive. So if you drive 10,000 miles in a year for business, 58 cents times 10,000 miles is $5,800, which would be deductible on your tax return. But ordinarily, people in the e-com game, especially those of you who have very high net worths, are driving around cars that are much more expensive than, the $5,800. And therefore, it's a lot more beneficial for tax purposes to use the actual car expense deduction. Okay, so continuing on here for the considerations for the car deduction. This is a question that I get all the time. Should I buy or lease my car? And I can't emphasize enough that this should really be an economic decision, meaning what makes the most money sense for you, yourself as an individual, and also your business. But there is certainly different categories of tax treatment based on whether you buy or lease and what your car is worth, how much it weighs, etc. So we'll jump through the tax part of it, the tax strategies around what type of car that you're buying. But just please note that the emphasis really should be placed on what makes the most economic sense for you. Okay, so if you look at the slide here, we've broken this down into 3 categories really. And it reads from top to bottom, so you should follow all these steps every single time that you purchase a new car. All right, so if the car weighs 6,000 pounds or more, so this is your big trucks, your Chevy Silverados, etc. But also this includes the Tesla Model X, which is very, very common now for entrepreneurs to purchase because the tax benefits are really, really great, as you're gonna see once I whiteboard this. But basically, if the car weighs 6,000 pounds or more, purchase the car in the name of the business and then only deduct your business use percentage. So here's the deal. If your business owns the car, it's a lot easier for you to be able to deduct and depreciate the value of that car. Now, the reason why this is an exception, remember how I said before, you should bifurcate your personal and business assets, and really your car and rent should be in your personal. This is one exception to that. If your car weighs over 6,000 pounds, then there's a special IRS rule that allows you to deduct the entire value of the asset in the first year it's placed in service. So again, this is limited to the business use percentage, and you'll see that in the calculation. But let's talk about the example we were just talking about before. Let's say you have 10,000 miles that you drove throughout the course of the year. 7,000 of those miles are for business use. That means 70% of your asset is business use, and it's in the name of your business. So if you have a Tesla Model X that you spent $100,000 for, $70,000 of that, which is 70% of $100,000, is a business use asset. If you have a Tesla Model X that you purchased in the name of your business for $100,000, 70% of it is business use, that $70,000 is a tax deduction in year 1, the first year it's placed in service, which is really the year that you purchased your car. So really, really cool loophole in the IRS rules that allow you to get this massive deduction if you purchase a car that's in excess of 6,000 pounds. And I can't emphasize this enough. If you're going to have a $70,000 deduction on your tax return, you better have good ammunition to protect that tax position. So you're going to want to track the mileage to make sure you can justify that it is 70% business use. But also you want to dot your I's and cross your T's and make sure that that asset is really in the name of the business. And it's just very, very important to make sure you get that right. Okay, so jumping forward to point 2 here. If your car is less than 6,000 pounds and the purchase price is valued over $50,000, for tax purposes, leasing is more beneficial. Now, the reasoning is very simple. If the car is over 6,000 pounds, again, you get that great loophole rule where you can deduct the full value of the car in 1 year. If the car is less than 6,000 pounds, you can only recapture or depreciate or deduct up to 16 to 18K per year. So if you have a car that's worth over $50,000, it's going to take you several years to be able to recoup or deduct the value of that car. So if your car is in excess of $50,000, again, prioritize economic decisions first. But for tax purposes, the deduction is going to be a lot slower than if your car was over 6,000 pounds. And we'll jump through an example of how lease payments are deducted. But for now, just know that if your car weighs less than 6,000 pounds and the value of the car, purchase price, is over $50,000, then it's more beneficial for tax purposes for you to lease the car. Okay, and then the last point here, If the car purchase price is below $50,000, and again, this is if it's less than 6,000 pounds and the purchase price is below $50,000, then purchasing it in your personal name, again, business bank account, business credit card, personal bank account, personal credit card, in your personal name, using your own personal money, purchasing the car would be more beneficial for tax purposes. Just because, piggybacking off of that last point, if you're limited to $16,000 to $18,000 of deduction each year, it only takes 2 to 3 years to recoup the value of that car on your tax returns. Okay, so as promised, we're going to go through this on the whiteboard here. So again, there's 3 scenarios that we're dealing with. The first scenario is if your car is in excess of 6,000 pounds. And let's just stick to the Tesla Model X example, because that's definitely a car that's in excess of 6,000 pounds. Let's say you buy a Tesla Model X for $100,000. And please don't judge me for my handwriting. I write like a 4-year-old right now. Tesla Model X for $100,000. Now you have to start to think about your business use percentage, which, as you already know, is your business use miles divided by your total miles. So let's say over the course of the year, you drove 10,000 miles in total. 6,000 of those miles are business use. So let's go with a 60% business use. Amount reimbursable would be $60,000. And again, if your car is in excess of 6,000 pounds in weight, this dollar amount here is deductible in year 1. As long as you buy the car in the name of the business and you accurately monitor your business use mileage, this entire dollar amount is deductible in year 1 of you acquiring the car. So next step here is if the car is less than 6,000 pounds and the car is worth more than $50,000. So obviously Tesla Model X, the purchase price is in excess of $50,000. They're expensive cars. So that's where I recommend that you move to lease the vehicle. At least it may not make economic sense. You have to make that decision for you. But for tax purposes, if the car is valued over $50,000 for the purchase price, it's more beneficial to just lease the car. It's a lot easier. So let's go with the lease payment here. So let's say Tesla Model X costs, $2,500 per month for a lease payment, okay? So we'll go with $2,500. Well, I guess I should do over the course of a year. So $2,500 times 12 is $30,000. This is your total annual lease payments. Okay, so $30,000. We're gonna go with a business use percentage. We'll use the same thing as above here. So 60%. 60% of $30,000, I wanna say that's $18,000. Hope my math is right. So in year 1 of owning this car, if you paid $30,000 in lease payments and you follow all of the rules here that we're laying out, $30,000 times 60% business use, $18,000 will be deductible of the total $30,000 in lease payments. Now, the last segment is for a vehicle that is less than 6,000 pounds and the purchase price is less than $50,000, then you just keep going with this example. The only difference is don't buy it in the name of the business. You buy it in your own personal name and you go through the accountable plan. Again, the over 6,000 pounds, you buy it in the name of the business. If it's less than 6,000 pounds, whether it's a lease or purchase, doesn't matter. You're gonna go with an accountable plan. So let's change the facts here. It's, let's say, $20,000 car. Okay. $20,000 times 60% is, I believe, $12,000. So again, for the IRS rules, $18,000, $16,000 to $18,000, really, depending on facts and circumstances, is deductible in 1 year. So obviously, in this instance, we have a $20,000 car. 60% of the miles are business use. That leaves us with $12,000 deductible. This would all be deductible in year 1. But let's say the facts were a little bit different, and this was actually a $50,000 car. That would mean 50,000 times 60% is, really testing myself with the math here. $50,000 times 60% gives us $30,000 deductible, or I should say reimbursable, because again, this is through the accountable plan. This $30,000 obviously can't be deducted all in 1 year. This will have to be broken up in at least 2 payments. So that's how it works if you purchase the vehicle and it's less than 6,000 pounds. Okay, so jumping back into my computer here, we're going to get to section 3 here, which is basically what amount you can deduct for your rent, your big fancy penthouse apartment. And basically, similar to the car, only the business use percentage of your rent is going to be deductible on your tax return. Again, you got to follow all the rules here. You got to make sure you have an accountable plan, etc. But let's say you have a 1,000 square foot apartment and 25% of that apartment is for business use. Let's say it's an office space, or maybe you're warehousing inventory in your apartment, etc. Whatever percentage of your apartment is for business use, that you should be able to deduct on your tax return. So my recommendation is you have some sort of documentation tucked away somewhere that shows, I measured out my apartment. I have X percentage of my apartment that I only use for business, and that's pivotal, that's key. The IRS requires that space to only be used for business. That's your desk used for business, that's a room you only use for business, that's a room you only use for warehousing, etc. And that percentage of your total home, let's say it's 10 square feet of your 1,000 square foot apartment is for business use. That means 10% of whatever your rent payments are tax deductible. All right, so hopping into segment 4 of our discussion here, the accountable plan. So this is, again, a template that we have put together for you guys to use. This is actually exactly what we implemented for me and my business. If you click the links below, I have both the template plan agreement, it's a Google Doc, and then I have the actual expense reports that I can share with you. But let's go through the accountable plan agreement first. Really straightforward. You can read through this language here on your own time, but what I did is I highlighted in yellow the sections you should be updating for your business name, and then here's where you put in your personal name, and then I recommend that you sign this and keep it someplace safe so that if you're ever audited by the IRS, you have this document in place. And you want to follow the actual things that it says in this agreement. So we'll skip ahead here to the actual expense policy memo, which includes what can and can't be reimbursed. And most of this, to be honest with you, should leave as is and not change because they're relevant to, specific IRS rules and what you can and can't deduct. But also, this is probably a good idea to share with employees for those of you who do have employees or contractors that you want to give certain perks to or ability to reimburse certain expenses. So very straightforward here for everything here that's included. We'll skip ahead to the home rent deduction and the car. So here we are. Company will reimburse the expenses listed below on a pro rata basis of home business use square footage versus the total square footage of your home. So here we have rent. So this goes back to what I was saying before, where if your rent is, $1,000 a month and 10% of your home is business use, you're going to get $100 a month deduction on your tax return. Here are some other things that are included on the list that we didn't go into detail, but it looks like we've got a bit of a typo here. I got to check my actual agreement to see if we have that typo. But, stuff like if you're a homeowner, property taxes, home insurance, utilities, repairs, a lot of cool stuff here. So then we have the car section in the memo here, which is basically car will reimburse the car expenses listed below on a pro rata basis of business use mileage versus total mileage of your vehicle. Again, you saw in the whiteboard example that I put together, this is relevant for both lease payments and then depreciation, which is basically if you own the car. So basically how you use this is you put this document into place so that it's a live, living, breathing document within your business, between you and your business and perhaps your other employees. And on a regular basis, you should be filling out expense reports. And whatever number gets spit out in this expense report should actually be reimbursed to you. So as I've said before in my other videos, if you have an S Corp, you can pull cash out of the business whenever you want, right? You can put money into the business, take it out, no tax implications there. But what you want to make sure you do is, for purposes of this discussion, you want a clear paper trail that you calculated what is reimbursable, and that reimbursable dollar amount flows through your payroll. And we'll go through that in the Gusto segment next. But first, let's jump into the accountable plan expense report. Okay, so let's jump into this here. Business name is, let's call this Joe Schmo Enterprises. Employee name, we'll do Chris Handsome Accountant. Expense report for the period ended. Let's say we do this monthly, right? So let's do 4/30/2020. Okay, April 30th, 2020. Let's do the automobile section first because we covered that first in our summary. So again, this is monthly. So let's say over the course of a month, you drove 1,000 miles. Okay, let's say of that 1,000 miles, let's say 550 were business use miles. Okay, let's say we were using an app, we checked our app, and 550 of those miles were business use. Let's say let's use a lease payment as an example. So let's do let's say your lease payment's $1,000 a month. You should be able to get a really cool car with that dollar amount. Fuel, we'll call it $200. Registration, let's say that wasn't relevant to the month. Repairs and maintenance, probably shouldn't have it with a lease. We'll throw it in there. So what we're looking at here is total auto expenses is $1,250, but the deductible portion of the auto expenses is $687.50, which should be 55% of $1,250. Because again, your total auto expenses was $1,250, but only 55% of your total miles are business use. Okay, let's do the same thing for your home. So let's say you have a 1,000 square foot apartment. Let's say 250 square feet of it is business use. My rent is $2,400, so let's do that. Mortgage interest, not relevant. I rent. Property taxes, I rent. Homeowners insurance, utilities, I don't know, $100. Repairs, not relevant. Cleaning, lawn care, no. HOA dues. So check this out. My total reimbursable dollar amount is $1,312.50. So literally what I do is, let's say this is my actual April 30th numbers. What I would do is literally print this expense report. So just file, download as PDF. And there, it looks very, very pretty. You have an expense report that shows $1,312.50 is what you should be reimbursed. So now what we're gonna jump into is Gusto and show you specifically how you can reimburse yourself this $1,312.50. And just like that, I'm in the top right-hand corner. So basically I had to move my screen here because you're gonna see there's gonna be sections relevant in the bottom right-hand corner that I was getting in the way of. So here we are in my personal Gusto account for my business. So let's go to run payroll. And we're gonna roll with an off-cycle payroll. And here we are, so we have Blake and I. So for Chris Rivera here, you enter in a payment. Ordinarily, my Gusto is set to autopilot right now, so my salary payments are automated and are automatically paying me on a semi-monthly basis. However, for reimbursements, obviously, this will be whenever we do a calculation and an expense report. So this reimbursement section here is where we would plug in our number. So $1,312.50, plug it into the reimbursement section here, save and continue. Oh, I think I included something, 1312.5. Okay, let's try again. Beautiful. All right, let's save and continue. And here we are. Once you're done, you'll want to click the submit payroll button. But I'll show you a couple things that you should note. Is ordinarily when you go through a salary payment, you'll always see it in this gross pay section, and there will be always taxes taken out of your paychecks. Keep in mind that these are reimbursements, not compensation payments. And remember, these accountable plans are deductions for your business that are not recognized as income for you as an individual. And that's documented here. The reimbursement, it's going to come out of your business account and it's going to go into your personal account. And as you can see, there's 0 taxes calculated here. So this is a really cool tool to document and say to the IRS, look, of course we have an accountable plan in place. In our payroll software, we have documented the actual payments from the business to me as an individual. And on top of that, check this out. We have our expense report. And again, I would always recommend you download this as a PDF and save it someplace neat so that if the IRS ever comes in, you have this PDF record of the 1312 reimbursement, and you can match it up to your payroll system to show that you have a clean paper trail of actually following your accountable plan.
And that's pretty much it, guys. If you find this content valuable, please smash that like button, subscribe, and I look forward to providing you guys with more content. Take care, guys.